Most of us are taught to save our money, and that's great advice. But what if there's an even more powerful way to build wealth? Today, we're going to dive into the strategy behind owning stocks and how it can shift you from just being a consumer to being an owner. So let's kick things off with a huge shift in how you think. Over on the left, you've got the consumer mindset. This is where pretty much all of us start out, right? We're paying for our data, we're paying our utility bills, we're the customer. But now, look at the right side. This is the owner mindset. Here, you're not just paying for things. You're actually profiting every single time millions of people use that same data. You're benefiting when all those bills get paid. See the difference? It's like being a player in the game versus owning a piece of the whole stadium. Okay, so what does being an owner really mean when we talk about stocks? Let's break it down because trust me, it is so much more than just watching a number go up and down on a screen. The key concept here, the big idea, is equity. When you buy a stock, what you're really buying is equity, a small, tiny piece of ownership in an actual business. You literally become a part owner. Just think about that for a second. You could own a tiny fraction of a company you probably use every day, like MTN Ghana or GCB Bank. All of a sudden, you're not just their customer anymore. You're on the team. And this brings us to a really crucial difference. Owning equity makes you an owner, which means you get to share in the company's growth and its profits. Now, that is completely different from being a lender. See, when you put money into a savings account, you're basically just lending the bank your money in exchange for a little bit of interest. With stocks, though, your potential reward is tied directly to how well that business actually does. So you're an owner. That's awesome. But how does that ownership actually put money back into your pocket? Well, let's look at the three main ways your investment can pay you back. All right, there are basically three pillars for how you make a return on a stock. First up is what's called capital appreciation. That's just a fancy way of saying the price of your share goes up because the company is doing well. The second pillar is dividend income. This is where the company literally pays you, its owner, a portion of its profits. And number three, you might get bonus issues, which are basically free extra shares that increase your ownership without you having to spend another CD. Okay, so now we know what stocks are and the ways they can pay you. But how do they really stack up against other places you could put your money? Let's do a quick comparison. Let's just look at the options side by side. First, the entry cost. To get into real estate, you might need millions, but you can start buying stocks with as little as 20 Ghana Cedis. It's incredibly accessible. Then think about liquidity. That's how fast you can turn your investment back into cash. Selling a house can take months, sometimes longer, but you can sell your stocks in just a matter of days. And this last one is so important, inflation. Money in a savings account actually loses its buying power as prices for everything else go up. But great companies often raise their prices right along with inflation, which helps protect the value of your ownership stake. And all of this brings us to what I think is the most powerful idea of all. This isn't just about the numbers on a spreadsheet, it's about completely shifting your entire mindset through the power of ownership. Here's the core idea right here. Instead of just being a consumer of products, you become a beneficiary of the consumption. Let that sink in for a moment. What does that actually mean? It means that every single time you see someone making a call or using mobile data or paying a bill to a company that you partly own, you're watching your own investment at work. You get to benefit from all the economic activity that's happening around you every single day. So, I'll leave you with a final question to think about. Which companies are you paying every single month that you could own a piece of instead? If this explainer got you thinking a little differently, make sure you subscribe for more insights just like this. Thanks for watching.